everybody? My name is Octavion, and it's great to be back. Happy 2021 with everyone. Glad to see everyone. Figuratively, I can't actually see y'all, but hope y'all glad to see me as well. This video, I am telling you 3 simple tips on how to invest in the stock market, right? 3 simple ones that I've used, and I know a lot of others use, that I've learned from people that invest a lot of money in the stock market, and it's tried and true. It works successfully, and it's just simple, good. It's simple, good rules that everyone should follow when it comes to investing, and keeping these things in the back of your mind when investing will keep you safe and hopefully out of potential debt and everything. So yeah, let's start the video. Please like, comment, subscribe. I post every Thursday. And yeah, share the video if you like the content. That's pretty much the vibe right there. So yeah, let's get into the video. Tip number 1 is to build a safety net for your investments. So by safety net, I mean invest in things that are has a long history of being safe, long history of making steady gains in the market, that is the market basically, and is heavily unlikely to go down. So investing money in a safety net, at least having a good portion of your portfolio in a safety net, will keep you from going out and losing all your money, and going into heavy debt. Especially because they're likely to go up consistently and give you long-term growth where you don't have to necessarily worry about it falling down and everything being garbage basically. So that the safety net would include things like index funds and ETFs, index funds of the whole market. So like the S&P 500, Vanguard has index funds, Fidelity, all these investing services, they have their own index funds, as well as index funds that encapsulate the whole market, like the S&P 500, S&P 400, those kinds of things, the ETFs, those also work. Then you also have government bonds. Those are important. Buying total market, investing in the total market of bonds, investing in the U.S. government bonds are also good. Investing in the U.S. market bonds. So like having that kind of basis safety net is very good, because it will keep you. It give you a nice backbone. It give you a nice foundation. Every house is built on a strong foundation, so that will be your foundation. That will be your initial. That should be your initial baseline for investing, and so you won't have to worry about falling off your pedestal and having nothing. You'll have a nice solid backbone that will keep you elevated. So that's the first tip. Okay, number 2 is stocks is not guaranteed money. Whether you have a strong foundation backbone, having that in your mind that stocks is not guaranteed money is super important, because those stocks can go down. Do not invest any amount of money that you are not comfortable losing. That's the main thing. Is like, if you invest money, you have to be comfortable with it going downhill, just going to the toilet bowl. It has to be money that you can play with, that you're not necessarily depending on, that you're looking for a quick flip or anything, because that gamble right there can get you in a lot of trouble. So definitely recommend that you take the stock market for what it is, and don't treat it like it's a get rich quick scheme or anything like that, because your money can get taken fast and without remorse, and you'll just be left there broke and looking stupid. So don't end up like that, right? Don't end up like that. Part of this advice as well is the stock market and the economy are not the same thing, as was evidenced by 2020. The economy went to like trash can. It was terrible. Like unemployment was record highs. So many people were like looking for work and just couldn't find it. Jobs were record lows. Like it was a terrible scenario. But the stock market, you've seen a huge rally by tons of companies, tons of billionaires made so much money. internet shopping became, e-commerce became huge market. Shopify, their stock went up crazy percentage. Tesla, um, you've seen tons of other stocks shooting up. Google shot up. Like a lot of stocks, Facebook, they rallied so much throughout the year, and you saw the economy be garbage. And so just seeing that, just looking at the year, the inconsistency just proves to you that the stock market um, and the economy are not the same thing. The stock market is basically kind of futures, is where the economy is expected to go, is what people are hopeful for, what they're looking for in the future. Um, but it's not where the economy is right now. So just keeping that in mind will be a huge key in when you invest. So you invest a little bit wiser when you put your money into it. And like I said before, put your money in that you're comfortable losing. So yeah. Number 3 is to understand the volatility of stocks. So depending on your age and your life circumstances, you can take more risk in the stock market than others, right? And you have that privilege, and figuring out what risk you can take is a huge thing about the stock market. Typically looking at it, like if you're younger, you don't have like a family, you don't necessarily have as much responsibilities, you can take as many risks as you want, and you're likely to have the payoff be okay. Like even if you go down, it's not like you were high up in the first place, if that makes sense. And if you get big, that would be great. That would be huge. But like it's like when you become very when you start gaining a lot of responsibilities, when you have a family and you have a strict career path and you have all these mouths to feed and college tuition and everything, and you have all these people relying on you, that's where investing in stocks becomes a lot more of a pastime thing. And in that case, I would recommend investing long term, investing, having that strong foundational backbone, and that's where you could stay at. Invest passively, so just have the money go into those stable things, those stable stocks that I mentioned before, and just have the money accumulate there. Without even thinking about it, because you don't do much, you just put money in and it just grows. You're good over your lifespan. But then you also have, but if you're younger and you want to take more risk and everything, which is fun, I can't argue against that. I am at the point where I take risk. I'm young, I don't really have those kinds of crazy responsibilities, and I'm not really super far up, so I am able to take risk. And I recommend people in specific circumstances that allow them to, with less responsibility, to be able to do so. I still recommend number 1, and invest passive, or invest in a steady backbone for young people and old people with more responsibilities. I recommend having a solid backbone. But with that, I think that the younger person, or the person with more money to play with, as far as like just taking gambles and is not relying on that money, you can also take those gambles and risk and just see what happens. That's part of the fun of the stock market, is seeing what can happen. Of course, I recommend doing your research, researching the companies, their like their market cap, their highs, their lows, like what they're actually, if it's like a whole, like what they actually do, what's the business model, the whole thing, looking at that performance over the past few years, all that stuff, trajectory. Look at that stuff. Definitely do your research on it. But at the same time, yeah, it's definitely like a gamble, and I recommend that you be responsible when you gamble, in the sense, and just, and if you want to be safe, invest passively, stick to the index funds, the bonds, that kind of thing, and you'll be good. If you want to take those gambles, if you're able to take those gambles, take those risks after you're doing your research. Those are my tips. That's it. That's the video. It's pretty simple. Thank y'all for watching. I've seen a lot of subscriber growth. So thank y'all if you're new. Thank y'all for watching the videos. My last video did pretty good, so thank y'all for watching. Um, Thank y'all for coming to the channel. Make sure to share it. If you like the content, if you got any suggestions for content, make sure to suggest down below as well. And yeah, that's it, man. Yeah, thank y'all for watching, and I'll catch y'all on the next one. Peace.